Hey guys, Joel Frank here, market analyst for YouTrading, and this is the midweek market update. So let's jump straight into it, taking a look at the charts here. I've got all of these charts on 1 hour candlesticks because I really want to show you these moves that have been going on in the context of where we've been in the last couple of weeks. So might as well start first with the US dollar here in the top left. This is the dollar index. We're roughly sat around the middle of the range that has prevailed since sort of the end of November and throughout December. Now, this is a 95.40 to 96.90-ish range. That kind of disguises the fact that there have been some interesting moves in FX markets outside of the Dixie. Most importantly, the dollar had strengthened to, I think, more than or nearly 5-year highs against the yen earlier this week. And that sort of takes me to the next asset class, which is bonds. So bond yields, now this is probably the most important, alongside that big weakening of the yen and the dollar strengthening to 5-year highs versus the yen. Well, that move was driven by a big pop higher in not just US, although US yields did lead the move, but global yields. So I've got this is the Treasury bond CFD here in the bottom left. You can see it's made a key. Remember, guys, when prices fall in bonds, that implies that yields have gone up. So this has been on the back foot this week, and it's broken below a key area of support here from back in October. Okay, and this actually, if I just look at the yields themselves, this coincides with the 10-year moving above 165 and the 30-year shooting above the 2% level. Bear in mind that this actually means that these bond yields are now back above pre-Omicron levels. Okay, that's important. So what we've basically seen is bond markets this week finally catching up to equity markets, which are here in the top right, and crude oil markets, which are here in the bottom right, in the fact that equities and crude oil had actually priced out Omicron pessimism before Christmas, whereas bonds, it's taken them until now to price out that pessimism about the 2022 outlook and beyond because of Omicron. Well, now, looking across all these markets, the story is a pretty positive one, you got to say. Yields at their highest for some time. We've just spoken about equities, but you can see that we're sort of consolidating just above record levels, close to 4,800. That has been acting as a bit of a ceiling, to be honest, but still equities have been well supported above the 4,750 area. This is the S&P 500, I should say, not just equities. So things looking very positive there. And look, you can see that we had this big push higher just after Christmas, but we'd already, by the 23rd, you can see just here, we had already gotten back, if you trace across, to the pre-Omicron levels. And it's kind of a similar story for crude oil markets. They've been moving very, very much in tandem. You can see crude oil markets are sort of close to recent highs, not fazed by the fact that OPEC are going to increase. Earlier on this week, they agreed to continue their output increases. That's actually been seen as a positive because it's like a vote of confidence. OPEC believes that the outlook for demand is strong enough to warrant these output increases. But anyway, you can see oil here trading close to highs. This is WTI above 77 per barrel, and it managed to recover. Well, actually, it's about its pre-Omicron levels now, to be honest. But yeah, it did see a big recovery over the last couple of weeks. Anyway, that's what's happened in all these asset classes. What about the rest of the week? Well, US data is important this week. We just had a massive ADP number, 807,000 jobs added to the private sector in December, according to their estimate, which was double expectations, more than double expectations. That kind of comes after the JOLTS report yesterday showed we have a very, very hot labour market. Obviously, labour market data, the official NFP release on Friday, is the key theme. So that is kind of expected to tell the same story as these two labour reports that I just spoke about. The other thing is FOMC minutes tonight on Wednesday. probably going to be, well, almost certainly going to be very, very hawkish sounding, because the December meeting, which is what these are the minutes from, was very, very hawkish. We had the doubling of the QE tape. We had the dot plot showing 3 hikes in 2022. There's potentially going to be some chatter about potential quantitative tightening options for 2022, which is when the Fed starts to reduce its bond holdings. So it's all very hawkish leaning. The big question is, looking back to the top left again, is this going to start to support the dollar? A lot of people think it will, but it hasn't really come into fruition yet. It has against the yen, but the rest of the G10 is still holding up pretty well against the dollar. Let's see if the dollar can push higher this week. That's pretty much it for this video, guys. Hope you enjoyed it, and I'll see you all in the next one.